Good morning folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade. Welcome to our daily fundamental video analysis. Once again, it is all about oil prices. The prices are plunging. For the last 2 days, the prices have dropped more than 40%. As you can see in the chart, WTI, West Texas crude oil price, has plunged below to the level of $12. Now, for me, the most important element is if the price crosses below the support level of 10, then the next level of support is 10. The next level of support is 5. And if the price breaks the level of 5, then the panic sell-off is really going to come in, and then it is highly likely for the prices to go all the way to zero or perhaps below zero. But the question is why that sell-off is so intense, why that sell-off is really taking place. The answer is the biggest US ETFs such as USO, all of these ETFs, they are moving their exposure from the front-end contracts such as the June contract for WTI crude to forward month contracts for such as July, August. So they are selling their positions out of June contract and buying the forward end contracts. Because if we see the contracts as far as the month of December, there isn't that much of a movement in terms of that demand, in terms of that price movement, because it is still holding its levels of $19 or sometimes above $20. On the supply and the demand front, this sort of a plunge in the current month contracts is certainly having an impact on the supply side. How so? As we discussed yesterday, those US rig numbers have dropped dramatically. Now they are near enough that level of 430. But remember, we want these rig numbers to fall well below that 400 mark, because it is only then that we can see that yes, now the rig count numbers are a slight bit more lower than what we have seen back in 2016. But remember, right now we are facing a situation which is, the oil prices never ever touched that negative territory during that 2016 and 15 when there was a huge supply glut. But then at the same time, what we also have right now is this pandemic lockdown situation, which, by the way, as we've discussed in previous videos, is easing off. So certainly that demand is going to kick off, it is going to kick in, and that is going to that's going to happen as soon as within the next week or so. Because remember, China is very much open now. Even big hotels such as Intercontinental, they have opened all of their hotels over in China. So certainly, if the hotels are coming back, the tourism industry is coming back to different parts. And remember, we're also going to hear a lot of easing of that lockdown measures over from Spain and Italy as well. That it will also support that demand equation. So on a longer term perspective, I think the demand has hit the bottom, and then the only move for the demand equation is to make to the upside, is to start moving to the upside. And of course, on the supply side, we are seeing that move to the downside, because obviously US rig numbers are down, and of course the OPEC is also about to curtail its supply. In fact, Saudi Arabia has already reduced its supply from 12.83 million barrel and moving towards that level of 8 million something, which we've discussed yesterday. Now, shifting the gears and moving into the economic data or economic docket space, then the only number which really matters for today is your US confidence data. That is coming at 1500 UK time, and the forecast is for 88. A number below than 70 is certainly going to rattle the equity markets, which, by the way, as you can see, the momentum for the index, such as the Dow Jones index, is pretty strong to the upside. If the number puts anything below 70, we could see the Dow Jones index once again facing that selling pressure, and then perhaps we can see some sort of a major move to the downside. But for now, earlier in the morning, the US futures were trading lower. Now they are trading to the upside, but only by a small margin of 88 points. That's all for today, and see you guys tomorrow.